Good morning. It's December 4th. It is 8:55 a.m. Eastern Time. This is Critical Point morning brief of the U.S. stock market. No video today unless something dramatic occurs. U.S. employers added 245,000 jobs in November. Financial Times and CNBC and several other sites then said that sign of the rebound is losing steam. In other words, yes, we created more jobs, but just not as aggressive as in prior months. And of course, some are concerned this is a sign of the rising virus making an impact. Now, unemployment slipped slightly towards something like 6.7%, if I recall correctly. And I do believe the long-term trend in unemployment is down into late this decade. We eventually will achieve full employment and therefore the lowest of unemployment. And then by the end of this decade, we will be set up for another primary cyclical recession and another spike in unemployment. In the meantime, I think you'll only see small, minor spikes along the way in coming years. And basically, you're going to see the stock market rally throughout that decline this decade. However, the stock market will be far more volatile than the unemployment. There can certainly be corrections along the way for the stock market that are sizable. All right, let's move to the stock market now. In the cash S&P 500, until we see closes below, meaning a single daily close below the 5-day average, may just be a sucker's move. But you do have to consider that it would be rolling over for the level 3 intra-month trend, and if this occurs the next few days, it would probably suggest some selling next week. Now, I would prefer to see it a couple days close below it. Anyone trying to trade for that, however, that would be too late of information to go with it. Something else to watch. So the 5-day average in the cash is actually 3651.63 this morning. That's a live average. Another way of looking at it is violation of yesterday's low at 3645.08 in the cash S&P 500. Specifically with a close below it, would probably be a sign of a level 3 top. So I am a bit concerned that we're going to see some selling next week because this rally, even though we made 2 record highs here, I believe, this week, at least in the futures, it's a slow climb. It's a sign that there's less demand, but also the supply is even lesser, but not dramatic. So I'm a little concerned, are we getting in year-end business, some kind of doldrums here, and yet it's just coasting higher? Well, with the overbought technicals, that is a concern that just a little bit of bearish news could suddenly make them rush for the sell door. Even yesterday, they overreacted towards the close. There was a little bit of news, I think it was on vaccine or something, and they sold it hard in a matter of a couple minutes, and I said, well, that's fast enough that the computers ought to come in and actually buy that. and it did. They put it right back up, at least by the extended hours, and it wasn't recovered by the close. And overnight was stable here. So we do have to consider that there can be a setback by next week. And next week is getting closer to the latest allowed for level 2 bottom, so there could be more drama than I realize. And we get a sharper decline here to put in a last-minute level 2 bottom, and then it should just trend higher into January for the level 1 top and a level 2 top, okay? In the meantime, however, I still am thinking what we have witnessed in the past couple of weeks is a running correction. And running corrections are normally the market moves higher, but it's losing its pace. It's not moving up as fast as it had been. It might be a struggle. It might be a bit of choppy, grindingness type action, but it moves higher. And once your indicators or whatever it is you're using suggest that, you know what, the correction should be over, it didn't work, it's fascinating how you then see the market actually speed higher. And that's your technical proof, at least, that you were right. It was a time of correction, but you were wrong in the sense it did not knock the market down. The market refused to go down. It struck a headwind, and then when that headwind went away, the market sped up because it wanted to go up anyways. And I think we're in that kind of scenario, but again, I cannot rule out a last-minute sudden drop here next week and maybe even a little bit the following week, and then that should be about it. The market should then move higher in January. So even a near-term bearish scenario suggests higher prices by January, suggests a chance for firm to higher trade into the end of the year. I think we're witnessing the old-fashioned Santa Claus rally, frankly. So I'm going to go with staying bullish here, even though I do realize short-term to very short-term indicators are overbought. It would be easy to knock this market down a bit. I do not believe we're overbought for those larger trends. I think somehow, some way, the market will move higher into January. So at any rate, watch, as I said, yesterday's low, the 5-day average could give you a clue that we're going to have a bit of a setback, and if you were to see some significantly bearish news, you have to consider, okay, it's pulling back for that last minute level 2. Otherwise, the best forecast is level 2 did not work this time around for a buy the dip moment. The market is strong enough to just keep going higher. Now, upside potential on the daily chart is around 37.08 to 37.48 in the March futures for the S&P 500. We have stair-stepping counts or objectives going all the way to 3,800 to even 4,200. Obviously, the higher the objective, the longer it would take, and some of those objectives may wait even into early next year. They may not even be achievable by January. I do think for 2021 we still have a potential for maybe even as high as 4,500. Okay, so I think it could still be a really good year for the stock market bulls, and I think the economy will be there to support that. But like I say, at least near term, yes, I can see why this has been too much of a quiet up move here. Really haven't seen the surge. We could still see a last minute drop before moving higher for it. I'm really not seeing the type of bearishness or can't fathom the surprising news that would really make them that bearish. I think we're kind of settling into something here that's net positive over the next few to several weeks. Now, for those of you interested in the intra-week swings, we have it's in the time zone for a level 4 top, okay? But it's also just now in the time zone for level 4 bottom. So it's a bit tricky here. It can rally all day today and then be down Sunday night into Monday and then back up Tuesday. I can see how it actually goes up just a little while for today and then pulls back some more and may not bottom until Sunday night, early Monday. So a bit tricky, but as I think I look out to late Monday on into Tuesday, we should see the market back up, all right? And I'm kind of hopeful that the bears won't really want to sell much going in ahead of the weekend, especially those who would sell short. I don't know as the bulls really want to buy ahead of the weekend, so this may be a stalled out quiet Friday, but I've got a slight bias that it's going to end on a positive note today. But if it does end on a downside by the end of the day, we want to be looking for a bottom, at least by early Monday morning, something like that. Again, I think we'll probably see the market moving back up late Monday to early Tuesday. But again, when we zoom out to that level 3, we just have to be concerned there could be some selling next week, and then that could be the last minute L2 bottom as well. And we zoom out further, and it's kind of suggests don't get too caught up on the bearish side. Ultimately, this market's moving higher into January for level 2, level 1 tops. Don't have much else to say here. I think all we're vulnerable to is, last minute kind of selling waves here near term, and ultimately there's still more buying to come. If they were to pass a stimulus package, I think that would really wake up the market, if not create a surge, and would show our running correction theory as correct. Manage your risk, have a great weekend, and stay safe, stay healthy, wear masks, help out the economy.